Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session for July 4th, 2021 in the Forex trading room. Today is Independence Day in the U.S., so happy Independence Day to all of you in the United States of America. And the rest of you, happy Sunday. This meeting will not be going out live. I am recording it in advance on account of I will be busy with the Independence Day festivities at the appointed time. So I'll be recording this at some point, polishing it a little bit, and then posting it online. So apologies for the delay this time around, but sometimes holidays do get in the way. Also, tomorrow, Monday, is a federal holiday and a market holiday here in the United States, July 5th, as a, part of Independence Day. Since it falls on a Sunday, it is observed on Monday, just so that everybody can get their mandatory day off, I guess. So this is going to be a shortened trading week, since Monday, for all intents and purposes, is a second Sunday. So trading will resume on, really Monday evening is when markets fully open again with Asia. Though trading will happen on Monday, but it's guaranteed to be light. You'll have the London session until noon, and then you'll have some Asian sessions going on around 5 p.m. So anyway, we are taking Monday off as well. And Tuesday will resemble Monday in that we will not have a 2 p.m. session. We will resume live trading on 8 p.m. on Tuesday, the 6th of July. So you've been advised. With that, let's get this show on the road. We're going to be going through our usual agenda. And look at the prior week's results, our currency strength meter, which I have redone. We now have a currency strength meter, and I am publishing it myself. So it does not depend on any third party, so it should be good to go from now on. We'll look at our fundamental announcements for the week, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting with the ledgers, we had I wouldn't say a huge drawdown, but we did have a couple of trades closed against on the long term, I think. But mainly it is the swap cost that's impacting there. The drawdown was negligible, and we still have trades open, and we'll see what they do. We were negative as Friday ended to some degree, and again, it was more of a sideways week than anything else, which we'll get into that later. But anyway, not a whole lot of change on the long term. On the intermediate, we took a drawdown here on quite a few trades that closed against, and we are pretty much at break even on the open trades as Friday ended. We also have trades open that we're starting to move in the right direction. So a little bit of a hit, but not a huge one. And the short-term ledger actually recovered nicely for the week. We only had one trade, that USD CAD short at the very bottom, and we took about 145 pips weight adjusted. So, and a nice up week on the short-term account. Notes and opportunities for improvement. It was a somewhat sideways but bumpy week in advance of the U.S. Independence Day holiday that will be observed tomorrow, as already mentioned. The dollar was the clear winner of the week, but the movement wasn't large. So when we see the currency strength meter, you will see that the dollar came on top of every other currency, but it was not a huge move. It's telling us that there really is no significant strength to the dollar. It just took a breather for a week. We are still waiting on breakouts, reversals, and continuations on many of the pairs, of which we have quite a few on the brink of or starting to trigger entries for trading. The fundamentals remain unchanged, with COVID fears at the fore, along with massive printing of currency in the US and to some degree in Europe. Australia had some very bullish guidance released last week, which may reverse or at least halt the fall in the Australian dollar. We'll see. But basically what's being said is that the economy is set to continue growing for quite a number of years, just based on what it's doing right now. And indeed, the Reserve Bank of Australia may be considering raising rates earlier than had been expected. Now, we're talking that the expectation was somewhere in 2024, and now they're thinking 2023. That's still 2 years away, but regardless, this sort of guidance will just add wind to the Australian sails, or it should. So we'll have to be very cautious in trading any sort of Australian weakness, though I still think that's the direction it's headed, but this may halt that process for a while. Here is our new relative strength meter, and I will be explaining what it means. Basically, you should focus on the currencies on the vertical to the left, so going down from the top: euro, dollar, pound, yen, Canadian, Swiss, Australian, and New Zealand. And then it's compared to the same currencies that are on the top. If you see a green, that means the dollar was stronger than the euro. The dollar was stronger than the pound. The dollar was stronger than the yen. As we can see all across the board, the dollar was stronger than every other currency. So the dollar gained against the other 7 currencies. However, as mentioned before, this was not a huge gain. But let's go from the top. So the euro was mainly negative. Where it wasn't negative, it was neutral, which means it did not move enough to trigger me calling it green or red. So it didn't move much against the pound, the Australian, and the Kiwi. It did drop against the dollar, the yen, the CAD, and the Swiss. The dollar was green across the board. The pound gained only against the Australian and the New Zealand, being negative against everything else and neutral with the euro. The yen had a pretty decent week. It did lose ground against the dollar. That's the only currency where the yen lost ground. Every other currency either gained or was neutral. The Canadian, same thing, losing only against the dollar and gaining or neutral against the rest. The Swiss losing against the dollar. See that pattern there? The dollar, everything lost against the dollar, and gaining or being neutral against the rest. The Australian was hard hit, losing ground against every other currency except the euro and the Kiwi, where it was neutral. And the Kiwi, same thing, losing against everybody except the euro and the Aussie, where it was neutral. The overall will give you a score. So the dollar +7 means it just was green across the board. And the others will give you either a red or green, or occasionally it will give you a neutral reading, but we don't have any this time around. There were either winners or losers overall. And hopefully that's clear. If not, I will continue trying to make it clear, but this will be the new format. And as I said, I am preparing it myself over the weekend now, so that we have something to show on this presentation. So that's your relative strength meter for the past week. Moving on to the calendar of fundamental announcements for this coming week, we have the Reserve Bank of Australia's interest rate decision tomorrow, Monday night into Tuesday morning. That will not be live traded. Obviously, we don't expect any change in the interest rate decision, but more importantly, we are not trading on Monday. We will be observing the Independence Day holiday. So the first fundamental to be live traded will be the FOMC minutes on Wednesday at 2 p.m. So we'll be opening the afternoon session a little bit early to accommodate that. And then on Friday, we have the change in employment out of Canada at 8:30 in the morning. We will also be opening up the trading room about 15 minutes before that. For those of you who are subscribers, do check our calendar in the email you will receive with the recording of this session, and adjust your schedules accordingly. With that, we move into the chart. So commodities, oil continues breaking out, giving us a higher high every week. This time it managed to crest $75 per barrel. That is a huge event. It's pretty much at a 5-year high. It's a few dollars short of that 5-year high, but it's certainly within spitting distance. So we now have an absolute bullish run on oil, which obviously should be benefiting the Canadian. I would still be, sorry, I would still be careful with that assumption. It's not one-to-one. Though the Canadian is heavily correlated to oil, there are quite a number of other factors, and the Canadian has been gaining strength consistently for a while now. There may be very likely retracements in the future. So it's not as automatic as oil goes up. So will the Canadian, though a lot of the time it does work out that way. So be cautious when trading these kinds of correlations. Moving on to the currencies, the dollar, of course, gaining against every other currency, including the euro. So we had a week ending with a test of support that had already been tested 2 or 3 weeks back. Looks like support did hold, though it was broken on Friday, but it ended the week above that support. We'll have to see how the market behaves on Tuesday when it properly opens again. Pound dollar, same thing, testing support and bouncing on Friday. USD JPY was completely bullish for the week, so the yen losing ground against the dollar, but on Friday it did make a credible turnaround, not breaking support or the trend line, but certainly starting to head in that direction. USD Canadian had a rough week with a recovery on Friday, so it was dollar, dollar, dollar all the way into Thursday, and then curiously enough, it managed to regain pretty much all the move, not quite all the move, but very close. The dollar still ended up gaining for the week, but it was off by a very small number of pips, around 20, 30 pips perhaps. But still, the dollar did win that battle. But that turnaround on Friday is very telling. USD Swiss, same thing, though Thursday it did take a breather, didn't move a whole lot, and then Friday it did a turnaround, also ending up close, not exactly, but close to where the week started, but still giving the dollar the upper hand. Aussie dollar, again, exact same thing, a dollar victory until Friday when it did a credible turnaround, but didn't manage to make it all the way back up as did some of these other pairs we just saw. And the Kiwi, same thing, though Wednesday and Thursday didn't move as much. So it looks like the fall was already stopping. And then on Friday, a little bit of a recovery, taking it a little bit more than halfway back to where the week had begun. So still the dollar winning, but not by a large amount. With that, we move off the dollar pairs. The Aussie CAD testing support at the bottom of the chart and not able to break. So still in a bearish movement, but it does look like it's starting to struggle. Euro Swiss moving steadily up against the Swiss in favor of the euro until Friday when it did a massive turnaround. And the Swiss actually ended up either gaining a small amount or mostly neutral for the week. I think we did label it as neutral, so it was less than the minimum amount of pips I need to consider green or red, but still it was a massive turnaround on this pair, undoing the entire week's move on one day. Euro pound sideways for the week, not much happening there. It was going up or down on alternate days and didn't really move the needle at all. Euro JPY also slightly neutral. Hard to tell here on the daily. I think on the weekly it ended up slightly lower than where it began, so technically a bearish week for the Euro JPY, but ultimately not a net mover. Euro Canadian hitting support at the very bottom, bouncing off on Friday, but that candle on Thursday was very telling. It was the longest candle we've seen out of the Euro CAD in quite a few months. Sometime back in April was the last time we had such a large candle. So for a one-day move, that was spectacular, but it couldn't sustain it. And on Friday, it started bouncing back. Pound JPY, very flat for the week. Aussie JPY, also reasonably flat. Euro New Zealand was a bullish mover for most of the week. Did slow down Wednesday into Thursday, just going in both directions. And then on Friday, went back all the way to where it had started, a neutral week. Pound Canadian, the CAD winning against the pound quite handily. throughout the week, ending significantly lower, but still well above support. So it doesn't look like the CAD is going to be winning this fight longer term, but of course, anything can happen. Pound Swiss, very sideways for the week. And last but not least, the pound Aussie breaking that trend line at the top on Friday, but still in the grand scheme of things, a net zero mover. Now, we will be adding some more charts to the mix since I was forced to look at a lot more charts than I normally do to make that relative strength beater, which means we may be adding a few of the pairs that we weren't really tracking before. We may be adding them to the mix. We'll see. I'll at least be looking at them more often than not. And I may see opportunities there we were ignoring. So we'll stay tuned for that. And that's it for the charts. Setups we see in progress. The pound, of course, taking a breather. We've seen some pound either stagnation or even small weakness, but it's still looking strong overall. It's at the very top of the charts on most of these pairs. The USD is looking sideways, even though it did beat all the other major currencies last week. It wasn't a big move. So it looks like it's taking a breather. I'm still a huge fan of dollar weakness, but we have to look at the market with agnostic eyes and trade whatever's happening, not what we think should be happening. The Australian, it still looks lackluster technically, but that fundamental announcement coming out of the Reserve Bank was a little bit of a surprise. So it is showing solid fundamentals. So we'll have to take that with a grain of salt and trade that one very, very cautiously. The yen, of course, still in weakness mode, has not been able to catch a break for a long, long time. At this point, I'm not even waiting for it to come back into strength. It just doesn't seem to be happening. So if and when it does happen, we will trade accordingly. For now, we're giving up on the yen, at least as a strength currency or even as a hedge. The Canadian continues to benefit from oil prices that are near 5-year highs. We'll see if it is able to sustain that for a longer period. That's pretty much it. My final words here, and this is a result of me speaking with somebody over the weekend who was sounding extremely discouraged because their plans weren't working out. Now, this had nothing to do with trading. This was a very personal conversation, but in my mind, everything just relates to trading. I do think like a trader, even when I'm not trading. So I asked for some details. And the other thing is, I do come from a long professional background in IT services where I was used to troubleshooting and fixing problems. And I can't get away from that. Even though I retired from that more than 5 years ago, that is still the way my mind works. So I asked for details to see if I can offer some help. And I came to find out that the plan they were following was a very fuzzy one. It really wasn't measurable. They had no clear idea where they were going or what it would look like if they got there. So it's a cliche, but if you don't know where you're going, it's very hard to tell when you get there. But more importantly, they'd only given it a couple of months. I mean, this was basically a baby planet. It has just finished being born. There are very few things in life that can be tested and deemed good or bad in a couple of months. Imagine if we started college and we got discouraged over the fact that we didn't understand something in the first couple of months. Well, you just started college. It's a 4 or 5 year program. You really can't determine whether it's good or bad for you in a couple of months. A marriage, a relationship, starting a business. Most businesses lose money the first few years they're in operation. There is nothing on the planet that will work in a couple of months, much less if it's something important. Me, I don't even fully use a trading system that I develop or that I copy from somewhere because I do copy things. I don't want to reinvent warm water or reinvent the wheel, how it's said in English. but I don't even use a trading system until I've tested it for at least a couple of years. And even then, I go in very cautiously, but I certainly don't abandon it. You have to give it time to either prove itself or prove itself wrong. And I found that many people give up two steps past the starting line. I mean, there's no way they were going to succeed, even if everything fell into place and it was working. There just are no results you're going to get in a month or two that are meaningful in any way. And it's probably, if you do get results, it's bad because you're going to get results that don't mean anything. You're being fooled by randomness, which is another thing I'm really gung ho on. There's a book by Nassim Taleb called Fooled by Randomness, which goes into all of this, that you have to measure stuff, but you also have to understand when the measurements are simply showing you random crap. So that's it. First of all, don't give up. Also, have a plan that actually is solid and that you can track. And then, even when you start measuring stuff, learn to recognize the difference between random events and something that actually is meaningful to whatever it is you're doing. That's going to be it for us this week, folks. I'm not going to ask for questions because I'm recording this off air today. So if you have any questions, well, email them to me. And for those of you in the US, have a rest of a great Independence Day holiday. I'll see you guys on Monday if you are subscribers. If not, I will see you next Sunday. Thanks a lot. Have a good one. Bye-bye.